Hi everybody, Paul Langham speaking. Thanks for all your messages when I was keeling over the other day. I'm feeling a bit better today and thought I'd just pop you this quick video to show you the type of thing which we do on the 1 minute chart. I've had quite a lot of questions from people about the shorter term time frame, and I just want to go through and show you how you can play some very quick scalping even on these markets which I won't say they're range bound, but there's 60-70 pips, something like that, during the London trading hours we've been having recently. And if you've got a brokerage where you get something like 0.8%, 0.8 pips, you can still make money on these things. Okay, I'm just going to mark up some charts so we can show you exactly what we're talking about. Okay, if you remember from some videos which we posted actually quite some time ago, I'm a huge fan of this price action where you get a second push, and we're looking at the 1 minute chart. Okay, so this is from this morning, 17th of October, 6:48. Okay, you have to be up quite early for this one. There was some highs over here to the left, and you had this initial push up from 130.88 and pushed up to around about here at 131.08. So it's 20 pip move from here to here effectively. Now okay, we know that this is the open, and we know that there is the possibility that this thing can actually go skyrocketing upwards, because this is the Frankfurt Open at 7 o'clock. But let's actually have a look and see what happened. You know, on the 1 minute chart it pulls back for a type of speed pullback here, and generally with those it does push to the upside quite quickly. Type of thing you can see here, there's one little speed pullback there which pushed straight forward, but this one actually pulled back a little bit further, and it probably actually gives you the heads up that things are not going as well as they thought they were going, and the market might turn around. In effect, what happened is it did actually break the top here, and you've got another 5-6 pips that it's gone forward. There's your second push, and there's your third push there, which actually makes a head and shoulders. I'm going to take all that off. Okay, so what does that actually show? It shows that on this one, first push, second push, and third push, there's your head and shoulders. We were off the bat, so 6:30, 6:48 type of time. You could have used this as an indicator that it might have been, this is an aggressive trader to short when it pushed forward up here, and if you had have taken that aggressive trade, you've got the third push there which confirms it, and you've actually got quite a lot of pips to the downside, so it's about down to 90. It's about 18 to play with there. And the upside is, okay, if it had all gone wrong, what you're going to do, I mean, at a certain point you're just going to reverse out of that thing had it actually gone upwards, had it gone forwards. That's a harder one to play, but let's have a look at the second one. One push, second push, one push, second push, one push, second push. There's one there as well, and then there's one there when it starts to slow down a little bit in the afternoon. Obviously I've scrumped up this chart so they're easier to see, and I would also indicate that actually this, remember, is counter trend trading because the market is actually moving upwards. You could argue there's one in there, but we don't go for that one. This is the hardest one of all of them because you actually broke the top. This one here, as soon as this thing starts, the second one here, as soon as it starts hesitating, these are 1 minute bars, so you've got 3 or 4 minutes. If this thing is hesitating, and we're talking about, you know, London Open breakout, you know, 7:50 in the morning, something like that. If this thing can't go like that almost immediately, as it does here, if it can't do that immediately, you know that it's stalling, and it's at least going to go sideways if it's not going to go down. This one is difficult, this one is relatively easy, this one is relatively easy, and this one is relatively easy. And then you just got to use this, take whatever is given to you on the way down. Of course that's a different discussion where you come out, but the point I'm trying to make is let's just have a look at how you can get into these trades to begin with. The type of price action you can look for in order to get you in. Okay, I would also indicate that actually, as we said, this actually is a market that's going up. You know, things are, it's a market that was going up, but you can even see if you push this one to the upside, if this is up like this, there's a small second push there which is a higher low. That's your indication to go that way. So if you're very, very good, you can play these things. You can play these things like ping pong. I'm talking about people who are very, very good can do this. You know, you could have shorted there, ridden that thing down there. You may have waited until you got the second push there, ridden it back down there, and used that as the indicator to reverse and go back up. You need interbank slippage and everything to do this, because there's not that much in it, but you've still got a range, 130, 133, 130.88. There's still pips in it, but the interesting thing I wanted to make was just these double pushes, which is what we used to publish quite a lot of videos on about, and people were interested, and they work. This is the hardest one here because you broke the top, and this is probably some Fibonacci extension and stuff, but we don't look at all that. That's really it. Okay, as regards actually the 5 minute in Charles and the normal breakout trade, difficult because of this thing up here. Actually, the box is, you know, there's the move which started quite early, and having gone from there, that's another one of the old rules that we had. You know, if the thing is going to break out from the top, imagine this is the box, you know, it's going to do something like this. The only way this thing is going to break out is when it's like stepping over a hedge. You know, it's very easy for it to do that because it's close to the hedge, you just jump over. But when it's down here, you know, it's like taking an Olympic, you know, you got to really jump very, very high to get the thing. It's exhausted by the time it's actually got the other side of this, which is the reason why it collapsed down. We didn't do anything, and the previous day's trade, which I'll look at in a minute, actually we got stopped out. That I found quite difficult to play that actually. This was probably an indication that things were going to go back up that way, but as we said in the other short clip, not a lot of pips up there. 130, 136, 96. I'll just show you yesterday's trade as well. Okay, here we go again. So there's this is the day before's trade. I couldn't make a video yesterday because I was feeling so bad. Exactly actually what I was saying. See that? The price, it moves up, it gets very, very close to the edge of the, it's like it's hopping over a stile in a field or something. It gets very, very close, and then poof, up it goes. They're the breakouts, so you want to take, that's the indication that it's going to go. We went long, and lo and behold, what happened there? Bang, taken out of the market. Yeah, that's what happens. That's Forex. It was a news event actually, which I normally ignore. And I would move the stops. I was moving stop up to I think -4, -5, something like that at that particular stage. But that's a very good indication here, an example of how you get these breakout trades where you get close to the edge of the barrier and then they just pop over very, very easily. That is it, I think, for today. I hope you enjoyed.